Financial Markets Update. April 17, 2025. Welcome to your daily financial markets briefing. Here's what's happened over the past couple of days, what's expected today, and the key actions investors should consider now. Recent market events. Mature U.S. stock indices saw a sharp sell-off on Wednesday, led by technology stocks. The Dow Jones dropped 1.7%, the S&P 500 fell 2.2%, and the Nasdaq tumbled 3.1%, putting it close to bear market territory. The sell-off was triggered by new U.S. restrictions on AI chip exports to China, escalating trade war concerns. NVIDIA, a leading chipmaker, dropped nearly 7% after announcing charges related to these restrictions. Other chip stocks like AMD and ASML also saw declines. Federal Reserve Chair Jerome Powell warned that higher tariffs could slow U.S. economic growth, adding to investor anxiety. Despite this, U.S. stock futures stabilized overnight, with slight gains indicating a potential pause in the sell-off. Global market reactions. Asian markets diverged from Wall Street's decline, with Japan's Nikkei and Australia's ASX 200 opening higher, while China's indices traded slightly lower. Indian markets have outperformed, driven by strong domestic consumption and optimism about a potential U.S.-India trade deal. Sectors like financials, telecom, and autos are hitting new highs, and foreign investors are increasing their exposure to Indian equities. Key news to watch today. U.S. initial jobless claims data will be released, which could influence sentiment on Wall Street. Japan is set to release its March trade data, potentially impacting Asian markets. Ongoing trade negotiations, especially between the U.S. and Japan, may provide further direction for global equities. What should investors do today? 1. Stay cautious with tech and semiconductor stocks. Tech sector remains under pressure from trade tensions and export restrictions. Consider reducing exposure to high volatility tech names until there's more clarity on tariffs and global demand. 2. Diversify across sectors and geographies. Given the outperformance of Indian equities and resilience in domestic consumption-driven sectors, investors could look at diversifying into markets and industries less exposed to U.S.-China trade risks. 3. Watch for short-term volatility, but don't panic. Market corrections are a normal part of investing. Avoid making impulsive decisions based on short-term moves. Instead, review your portfolio's risk tolerance and ensure you have a diversified asset allocation that fits your financial plan. 4. Monitor key economic data. Pay attention to today's U.S. jobless claims and Japan's trade figures, as surprises could move markets further. 5. Focus on quality and defensive plays in uncertain times. High-quality large-cap stocks, especially in sectors like financials, telecom, and consumer staples, tend to offer more stability. Final thoughts. Markets are navigating a period of heightened uncertainty, driven by trade tensions and central bank caution. Stay informed, remain diversified, and avoid knee-jerk reactions. Remember, volatility creates both risks and opportunities for disciplined investors. Stay tuned for more updates, and make sure to subscribe for your daily market insights. This video is for informational purposes only and not investment advice. Always do your own research or consult a financial advisor before making investment decisions.